eventually Bitcoin enters my purview as being a safety play, but not until it gets a little bit lower. But again, keep in mind, it's not going all in on Bitcoin. It's allocation, proper allocation, which keeps you diversified. And think about this, is you might have a bunch of money in the bank, but if the dollar collapses, that's worthless. But if you diversified 10% in gold and maybe some in Bitcoin, you might still be made whole even with that collapse in the dollar.
As the economic uncertainty and extreme market volatility continue, Gareth Soloway, a popular technical analyst and president of InTheMoneyStocks.com, is predicting a recession for the U.S. economy, then later a depression. In a recent interview, Soloway notes that each of the past generations has suffered economic depression, and we just might be facing another one now. According to Wikipedia, an economic depression is a period of sustained, long-term downturn in economic activity in one or more economies. It is a more severe economic downturn than a recession, which is a slowdown in economic activity over the course of a normal business cycle. In his interview, Soloway explains that this bear market might very well not be like any of the ones we've had in decades. In fact, he believes it might be signaling the end of decades of a very prolonged bull market. Soloway also discusses how investors and traders can protect themselves and stay afloat as the global economy comes to a crucial point. He suggests that investors properly diversify their portfolios and stay peeled for updates to know when to pivot. We will now take you to Gareth Soloway's interview. Please watch, like, and share this video. Also, ensure you hit the like button, drop your comments and observations in the comments section, and subscribe to the channel for more videos. Thanks for watching and enjoy the video.
Yeah, so what I'm thinking is I think the high on the NASDAQ 100, potentially the S&P 500, we will not take those out for over 10 years. I do think that's the case. And I think it might even be reminiscent of the .com, where the NASDAQ did not take out the high. I think it was almost 15 years before it took out those highs. And I think there's a couple things that concern me, right? And I could see why he could be correct on this, is that number one is you have to keep an eye on the 100-year cycle, right? There's always something, people will tell you this, and I've heard this many times, is that every generation needs to experience a Great Depression. Well, we're coming up to the 100-year cycle of the Great Depression later this decade. Think about you might say, well, 100-year cycle, what's that? Well, think about the Spanish flu and COVID, 100-year cycle, right? So you do have some basis in cycles to understand that or to make sense of it. And then also, if you just look at the charts, I mean, what's remarkable about this and why I think people have to be so careful thinking that any low is a significant low where it's going to go back to all-time highs is that, I mean, you're looking at the chart. If you, and I don't know if you mind, do you mind if I show my chart again?
Yeah, please go ahead, please. Yeah.
So if you look at, this is the S&P 500, right? Look at the move we've had since the Fed started printing money. I mean, this was a bull market here in the late 90s. This was a bull into 2000, and this makes those look like tiny little peas, right? I mean, same thing with the NASDAQ 100 is, even if you compare, and this is kind of scary too, is the vertical nature of the .com is almost like the vertical nature since COVID on the chart, except this one is so much bigger than the .coms even. I mean, amazing. So I do think that there's, I mean, to me, if you're asking me in the next, I mean, again, it's hard to know if it's the next 2 years or in the next 7 years or whatever, but if I had to guess where this market will bottom out, I'm going to go out on a limb and I think that you're going back, you have to go back and retest the previous levels. So something in trading that I found to be very, very accurate is that markets like to break out and then they like to retrace back to what we call the scene of the crime, right? Where the breakout point was. And the problem is we never did this with the cycle high. Like on the S&P 500, when you broke out, you just kept going. I mean, except for COVID, little dip here, but there's a need for a market or a stock to retrace back to that level. So if I had to guess, I think that's where we're going back to. I don't know the time frame. Timing is so hard. But I do think that's what we're going to go back to. You could have all the signals in the world pointing to something, and we don't know. We don't know for sure. You don't know what can ultimately happen. So I think you're 100% right. Is that you basically, all we can do is trade what we see, and then that can change on a daily basis. And a good trader can quickly pivot. Traders that don't pivot, they're the ones that end up losing out. It's all about that pivot. For me, the way I'm trying to prepare is, I mean, I'm a trader and I understand that not everyone has that luxury to have that time to study to be a trader, but also it's hard and it's not meant for everyone, and it takes years and years of work. So you can't just be like, well, I'm going to become a trader today and this I'll be okay. So I mean, keep that in mind. But I also think diversification amongst assets is important. What I love telling people is that I put about 10% of my net worth in gold and silver. And the reason I do that is not because, it's more as an insurance policy. If I wake up one day and it's a worst case scenario, the banks are shutting down, the dollar has collapsed, at least I know I have that gold. And I'm talking physical gold here too, not just stuff that's GLD, which, if things get shut down, you can't trade out of it, you're screwed anyways. So I think it's being prepared about that. I think, and again, I'm not trying to be an alarmist here, but think through your daily life and think, okay, if X happens, how do I deal with that? What do I need here at my house? What do I need? Those type of things I think are important. Eventually, Bitcoin enters my purview as being a safety play, but not until it gets a little bit lower. But again, keep in mind, it's not going all in on Bitcoin. It's allocation, proper allocation, which keeps you diversified. And think about this, is you might have a bunch of money in the bank, but if the dollar collapses, that's worthless. But if you diversified 10% in gold and maybe some in Bitcoin, you might still be made whole even with that collapse in the dollar. And I think that's the key, is thinking out all the possibilities and trying to plug those holes. And again, there's possibilities I'm probably not even thinking of, but I do recommend people kind of take a look at their lives and think about that. I think that at least at this point in Bitcoin's lifespan, you're 100% right. I mean, I hold out hope that as it matures in years, decades, potentially, it does become the digital gold. But it absolutely is a risk on, risk off asset right now. And people have to just be honest with it. I mean, so many people kept on saying, oh, it's the safety play for inflation and this, and then we see price collapsing right from 69 down to where it is currently. So eventually it gets low enough where the risk reward starts to make sense for me, but it's just not there. And just like any asset, you don't know the future. No one does. I don't know it. So you still want to diversify and make sure you have a wide array of assets, not just Bitcoin.
Over the past week, several market experts have stated that the U.S. is already in a recession or getting very close to one. Most of the people in the latter category also noted that at this point of the Federal Reserve's aggressive hiking campaign, a recession has become inevitable for the world's largest economy. Last week, Steve Hanke, a professor of applied economics at Johns Hopkins University, told CNBC that there's an 80% chance of the U.S. falling into a recession. On Friday, Hanke said, "The probability of recession, I think it's much higher than 50%. I think it's about 80%, maybe even higher than 80%. If they continue the quantitative tightening and move that growth rate and M2 money supply into negative territory, it'll be severe." Like Soloway, Hanke also blamed the Fed for the skyrocketing prices of goods across the country. The Fed exploded the money supply, he stated, starting early 2020 at an unprecedented rate, and they don't want this length to be visible between the money supply and inflation. The professor explained that the central bank flooded the economy with large amounts of stimulus and liquidity to avoid an economic downturn during the COVID-19 pandemic, but did not work on gradually reducing that money supply over time. He added that the growth of the M2 money supply is slowing too quickly and could tip the economy into a recession if the situation is not properly addressed. What do you think about Soloway's interview and the professor's assessment of the country's economic situation? Please drop your comments and observations in the comments section below, and don't forget to like this video. Also, ensure you subscribe to the channel and turn on post notifications for more videos like this. Thanks for watching.